Right. So what is Forex trading? So earlier on, we talked about different things that you can trade. And one of the things that we mentioned you can trade is Forex. So when we are looking at Forex trading, what we are looking at is we are looking at currency trading. And we've already explained what trading is. So trading means you are buying and selling. So if you are doing currency trading, it means we are buying and selling what? Currency, right? We are either buying or selling currency. So we are selling currencies like the euro, the pound, the US dollar, the Australian dollar, right? When we are doing this, then we say what? We are doing Forex trading because we are trading currencies, right? So as we go on, we'll explain what the exact currencies we trade and how we trade it. So when you're trading currencies, the closest example that you can equate Forex trading is the way the Forex Bureau work. So the Forex Bureau, I'll shorten this as FB. So when you go to the Forex Bureau, what happens? You have a dollar, and let's say you want euros, right? You want the dollar. When you give them the dollar, they'll give you euro. But you realize that the amount of money you give them is always higher than the opposite. So what I mean is, let's say you give them $1 and then they give you 0.85 euro. Right? If you take 0.85 euro back to them and you tell them you want dollar, they are not going to give you because they are going to sell it for maybe 0.87. So the difference between the 0.85 and 0.87 is their profit. So what the Forex Bureau is doing is they are buying and selling currency and they are making money from the difference in the prices. That is very the traditional version of Forex trading. So they are buying and selling currency. So when we are doing Forex trading, what we are doing is very similar to what the Forex Bureau does, but just the approach and how we make money is slightly different from what the Forex Bureau is doing. So when we are trading, as I said earlier, we are trading currencies and the currencies are traded in pairs. Right, just like the example I gave right now, you cannot trade just the US dollar. Like the example I gave, you are trading the dollar for the euro. So there is always two currencies. And these two currencies are representing two teams, A and B. And these two teams or two currencies, what they are doing is that they are fighting. And when they are fighting for value. The two teams are fighting for value. These two teams have been named after two animals based on the way those two animals work. It's very similar to the way these two teams behave. So you have what we call the bull team. And then we have the bear team. So when we are trading on so the bull is a male cow, and then bears, depending on where you are, you might be either familiar or not familiar with bears at all. All right. So let me see if I can find a picture of a bear. Yeah, so that's a bear. This is a bear. Depending on where you live, you might not be familiar with a bear, but that is what a bear is. And when a bear is fighting, he use the arms. The strength is in the arm, so you use the arm to drag whatever is fighting to the downside. And then we have the bull. So that's the bull, right? We have this typical Russian game that when they are fighting, the bulls are fighting, and then they use the horn, they go down, run and attack and raise whatever they are fighting up, right? And they'll be waving some red flags. I don't know if you're familiar with them. So this team is representing the team that moves something up because the bull moves something up, right? So let's go back here. So in trading, the two teams are mostly represented when we are doing analysis. You realize that the two teams are represented with two types of candles. So we have a team that is moving the market to the upside and a team that is moving the market to the downside. And one of the teams is represented as the red team and the other one is represented as a green team. So the team that moves the market to the upside is represented as the green team. And the team that moves the market to the downside is represented as the bear team. So this is the bull team. The bull team. And this is the bear team, right? So these two teams are fighting for value. The one that will win the fight is going to determine which direction the market will go to. So the bulls, the goal of the bulls is to move the market to the upside. So if the bulls win the fight, they will move the market to the upside. If the bears win the fight, they will move the market to the downside. So depending on the direction of the markets, we are able to determine which team is winning or which team the market is in favor of, right? This might sound a little bit tricky because we've not looked at some things which we'll get to in a minute. So when we are trading, we have two teams, A and B. Team A and Team B. And the Team A is always for the bull team, and the Team B is for the bear team. And these two teams are the same as the currencies that we are trading. So we have Team A and then Team B. So if the market pushes up, it means Team A is the one winning. And if the market pushes down, Team B is the one winning. This is very important. So there are so many, they have so many different terminologies with how you call the first team and the second team. It's not really important. Like the important thing is understanding it. And then once you understand it, later you can learn the terminologies and you'll be good. Or you can decide not to learn the terminology because you don't necessarily have to learn the terminology, right? So the bull start from a lower point and will finish at a higher point. And the bear start from a higher point and will finish at a lower point, like that. We will look at this into details when we are looking at candlesticks. So that is basically what trading is. You are buying two currencies, you're trading them together, and the two currencies that you're trading together are going to, it's like they're fighting against each other. And depending on the two currencies or the two teams, so the two currencies are representing two teams. And depending on which of the teams is winning the fight. That is what is going to determine the direction of the market. So if the market pushes up, it means the bull team are winning. If the market pushes down, it means the bear team are winning. So for instance, if you have euro and the USD like this, and it pushes down, which of the two currencies is causing euro USD to push down? Take a second. Right, so that would be the USD. If it pushes down, it means the USD is a stronger currency, right? And if euro USD pushes up, it means euro is a stronger currency. So let's do a little exercise here. So let's say we have, or what we have here are currencies, right? So we are going to list a few currencies, and then we'll look at which of the teams are winning. And depending on that, we will guess which direction the market will go to. So we have A, B, F, H, B, K, T, E, P, U, M, L, Q, W. So these are all different teams or different currencies that we can trade, right? And I'm going to underline the team or the currency that is winning. And then our role would be to determine the direction of the market. So you use up and down arrow to determine the direction of the market. Up and down arrow. So I'll do the first one. You pause the video and then you answer them and then you continue the video. So first one. So we have two teams, A and B. A is the one that is in control, or A has won the competition. So what do you think the direction of AB would be? So as we said, if A wins the competition or the fight, the direction of the market will be what? Up, or AB will push up. So pause the video and do the remaining ones and then come back and continue and check your answers. All right, so for FH, if H is a stronger team, because H is a second team, or the team B, it will push the market to the downside, or FH will go to the downside. For BK, it will push up because B is a stronger currency, which is the first currency or the first team. For TE, the market will push down. PU, the market will push up. ML, the market will push down. KW, the market will push up, right? So depending on which of the teams that is winning, that is what is going to determine the direction of the market, right? So let's do something else. Let's look at the opposite. Let's look at the opposite. Let's try and do something a little tricky. So I'm going to list another team, GB, NM, YU, LK, and TW. So these are also two teams, and I'm going to underline the weaker team, or the team that lost the competition, not the one that won the competition, the one that lost the competition. So W lost the competition, L lost, Y lost, M lost, B lost. All right, so I'm going to do one. You pause it and do the remaining ones and check your answer. So Let's start with the first one. So if B lost the competition or B is a weaker team, then it means G is the stronger team. So the market would always move in the direction of the stronger team, which is what? Up. So this one would push up. If M is a weaker team, it means N is a stronger team. So the market will push us up. If Y is a weaker team, it means U is a stronger team. So the market will push down. If L is a weaker team, it means K is a stronger team. So the market will push down. And if T is a stronger team, it means W. If W is a weaker team, it means T is a stronger team. So the market will what? Would push up. Does this make sense? So if you don't understand anything, note the section you don't understand, get back to me and we will discuss it. All right. So the first team, so we have two teams, A and B, right? And the A team is the one on the left, right? We know that. And the B team is the one that is on the left. And this team is also referred to as the bull team. And this team is also referred to as the bear team. So when you are trading, what are you basically doing? When you are trading, your role as a trader is to determine the direction of the market. If you know the direction where the market is going to, then you would make money. So if you have to analyze to see which of the two teams are stronger or are in control, then you back them. So if the A team is in control, then it means the market is going to go up. Then it means you are predicting that the market will go up. And if the market goes up, for you to make money, you have to buy. So if you buy it and it goes up, you would make money. And if B is a stronger team or currency, then the market will go down. So for you to make money, you have to sell. And if you sell and it goes down, you make money. Which means if the opposite happens, you're going to lose money. Which means if you thought A was the stronger one and then you bought and it pushes down, you will lose money. And if you thought B is a stronger one and then you sold and then it pushed up, you're going to lose money. Does this make sense? All right, so let's look at the currencies that we trade and how we pair the currencies together. So we have so many countries and currencies, but not all of them are available to be traded on the Forex market. So we are going to talk about the ones that are available for trading on the Forex market. So we have three main categorization of the currencies that we trade. So we have major currencies, minor currencies, and then we have the exotic currencies. But we are not going to, I would still state which ones are the major and the minor, but we are still going to trade them under one umbrella. And then we are going to separate the exotic. So we have major and minor and then exotic. So let's start with the major and minor. So with the major currencies, we have Canada, and every currency is represented with 3 capital letters in the Forex market. So Canada is represented by the Canadian dollar, which is CAD. We have USA. Their currency is USA or United States of America. Their currency is the USD or United States dollar. We have Europe. So the whole of Europe, they spend one currency, and the currency is euro, which is represented as EUR. We have Australia. Australia, they spend the Australian dollar, which is represented as AUD. We have New Zealand. New Zealand, they spend the New Zealand dollar, which is represented as NZD. We have Britain, or the United Kingdom. They spend the GBP, or the Great British Pound. And then we have Switzerland. They spend the Swiss franc, which is represented as CHF. And finally, we have Japan, or Asia. So Japan is representing the whole of Asia, sorry. Japan is representing the whole of Asia. So we have the Japanese yen. So let me straighten this up a little bit so everything will line up. So these are what I'm referring to as the major and the minor currencies. We'll also look at the exotic currencies, but as you've noticed, we don't trade one currency. So we have what we call currency pairs. So we are going to look at how the currencies are paired. All right, so this category is the major and minor currencies, right? And we have what we call exotic. So exotic currencies are like, they are not, these economies are big economies. Mostly they are providing something of value to everyone in the world. And these are a few other countries that are also dominant in the Forex market, but not as popular as the major and minor currency. So we have countries like Mexico, and they spend the Mexican peso, which is represented as MXN. We have countries like Poland, they spend the POL, or the Polish lira. We have Turkey, they spend the Turkish lira, which is also represented as TRY. We have Sweden. They spend the oh shit, I think that's confusing. This is Swedish krona. Sorry, 1 second. Sweden. Yes, so that was right, Swedish krona. I even forgot it. Like, it's not something that's like it's popular. Yes, yeah, I think I remember now. It's represented as SEK, SEK, Swedish krona. And then we have Norway. They spend the Norwegian krone, which is NOK. So these are other currencies that, and there is another popular one, which is the South African rand. South African rand. All right, so these are referred to as exotic currencies. So when we say something is exotic, it means what? It is rare. But as I've mentioned earlier, we don't trade the currencies individually. We trade them as pairs, which means you have to, sorry. So the South African rand is represent, South Africa, they spend the South African rand, which is represented as ZAR, right? ZAR. Each currency is traded as a pair. You have to pair it with another currency before you can trade it because it's a trade, an exchange between two currencies. So all the exotic currencies are traded with a US dollar. So if you are not from any of these countries, you realize that any other country aside this major currency do most of their business activity with the US dollar. That's why these currencies are traded with the US dollar. So the currency pairs for this would be paired with the US dollar, where the US dollar would always be the first team. And then these currencies will be the second team. So this is how they are paired. So you have US dollar, MXN for the Mexican peso. So if you are trading it, is how it will be. You have USD POL. We have USD TRY. USD STK for Swedish krona. And then we have USD NOK for the Norwegian krone. And then finally, we have USD ZAR, which is the South African rand. Let me put that up here, USD. So in all these currencies, the US dollar is the first currency and they are the second currency. US dollar first currency and they are the second currencies, right? First, US dollar is always the first currency among these currencies, right? So what it means is that if the dollar is strong or if the dollar is the team that is winning, all these currency pairs would push to the upside. And if these currencies are stronger instead of the dollar, or in other words, if the dollar is weak, these currency pairs will push to the downside, or the bears will be in control. And if the dollar is strong, the bulls will be in control. Does that make sense? With the major currencies, there is a very specific way of pairing them. You cannot pair them anyhow. There are certain currencies that can only be for the first team, and there are specific currencies that would only be for the second team. So we're going to look at some currencies that would always be for the first team. So the first currency that is always for the first team is the euro. And it's always the first currency. So it means that if you pair the euro with any of these currencies, this is how it's going to be. So you have euro USD, euro CAD, euro CHF, euro AUD, euro NZD, euro GBP. I think it's left with one, and then euro JPY. So any currency that is paired with the euro will be the first currency, and all those other currencies would be the second currency, just like we have here. And another currency that would always be the first currency is the pound. So the pound would also always be the first currency when it is paired with any other currency, which is represented as GBP. But as you can see, we've already paired the pound. The pound has already been paired with the euro, and it is the second currency. So that is the exception. The only time the pound would become the second currency is when it is paired with the euro. Aside that, all other currencies paired with the pound would be the first currency. So we have GBP, AUD, GBP, NZD, GBP, CHF, GBP, USD, GBP, JPY, GBP, CAD. All right, so that is all the pairing. We've already paired euro here, so we don't need to add that here. So these two currencies would always be the first teams, or they will be for the bull team, which means if they are strong, all these currencies are supposed to push to the upside, all these currency pairs, right? And we have certain other currencies that would also always be the second currency. So the first one that would always be for the first team or for the bear team is a Japanese yen. So if you pair any currency to the Japanese yen will be the second currency. So we have AUD, Japanese yen. So you pair all the currencies against the Japanese yen. NZD, Japanese yen. CHF, Japanese yen. CAD, Japanese yen. USD, Japanese yen. Then euro, Japanese yen. We already know that when we pair euro with anyone, euro would be the first currency. And we have pound, Japanese yen. We already know that the pound would also be the first currency. Right. So anytime you pair the Japanese yen with any currency, this is how it will be. The Japanese yen is always the second currency. So it means that anytime the Japanese yen is strong, it is going to push all this market to the downside, or all these currency pairs. Another currency pair that is also always strong, that is also always the second currency is the Swiss franc, which is the CHF. So the Swiss franc would also always take the second position. So we have AUD, Swiss franc, NZD, Swiss franc, CAD, Swiss franc, USD, Swiss franc, Euro, Swiss franc, Pound, Swiss franc. And this is also one exception. So the exception here is the only time the Swiss franc would be the first currency is when it is paired with the Japanese yen. So here, like you can see here, see when the Swiss franc is paired with the Japanese yen, the Swiss franc becomes the first currency. That's the only exception. Apart from that, the Swiss franc is always the second currency. So from what we have here, we said the euro is the first currency. The pound is always the first currency, except when it is paired with the euro. The Japanese yen is also always the second currency. The Swiss franc is also always the second currency unless it is paired with the Japanese yen. That leaves us with this four: Canadian dollar, US dollar, Australian dollar, and New Zealand dollar. This one does not have very specific position that it will be. So for example, here with the euro, they become second. With the JPY, they become first. With the pound, they are second. With the Swiss franc, they are first. So they can either be first or second, depending on what currency they are paired with. But what about when they are paired against themselves, the ones here? So Canadian dollar and the US dollar, when you pair them together, the US dollar will come first. So it is US dollar, Canadian dollar. That's how the pair will be. And then if you pair the Australian dollar and the New Zealand dollar, it is Australian dollar first, which will be the first team or the bull team. And the New Zealand dollar will be the second team. So AUD, NZD. But when you pair the Australian dollar, Canadian dollar to the Australian dollar and US dollar, the Australian dollar and New Zealand dollar would always come first, which means you have something like Australian dollar, US dollar, and then Australian dollar, Canadian dollar. And then with the New Zealand dollar, it is New Zealand dollar, Canadian dollar, and then New Zealand, US dollar. Does it make sense? So when you do all this pairing is called a major or minor pair. But at the beginning, I said that we are going to look at which ones are the major and then the minor ones. So any of the currency pairs that have the US dollar in them is referred to as a major currency pair. So let's identify those ones. So we have Euro USD, Pound USD, USD, Japanese yen, USD Swiss franc, USD card, and we have AUD USD, and then NZD USD. These are referred to as the major currency pairs because they have the dollar in them. The dollar is we can say the dollar is like the most prominent currency. It is the only currency, we call it a reserve currency. You can go to anywhere in the world with a dollar and you still be able to buy something, even when the currency is not like the country has its own currency, but you can buy anything with a dollar. If you go to any bank anywhere in the world, they have the dollar inside the bank. So it's one of the most traded currencies in the world. Right. So so far we've looked at what Forex trading is, the bull and the bear team representing the first and the second team. We've also looked at the currencies that you can trade and how to do the currency pairing. So when we are trading, as we mentioned earlier, we have two teams, A and B. And the first team, as we've mentioned, the bull team, having the green colored candle. And then we have the bear team representing the red colored candle. So they are always the currency on the left hand, and this is also on the right hand, or the first and the second currency. So when it's going up, if we are saying that the bull team is going up and the bear team is coming down, where it means we started from down here and then we finish up here. Where we start from is called open price. Open price. And where we end is called the close price. So here, if we are going down, it means this, the beginning of this body, the beginning of this candle here is called the open, and the end here is the close price. So the close price would be down here, and the open price would be up here, right? So the distance between the distance between the open and the close price is called the body of the candle. So every part of this green part is called the body. And here too, this will be the body. So we open, if we are bull, because we are going up, we open here and then we close here. If we're bear, because we are going down, we open here and then we close here, right? If before we open here, before when we are going up, if we open here, but then we come down a little bit before we continue going up, and before we close here, we go up a little bit, it leaves what we call wick, or it's like it's tracing your movement. So we open here, but when we open here, we came down a little bit here and we close here, but before we close here, we went up a little bit. This leaves us with a trace of wherever we've been to. And this trace, because this is a lower point that the price came to, we call that lower point low price. So this is low price. Let me change this color. We call this low price. So here too, it's the same thing. So it doesn't matter if this is going up or down. Low price is still low price. So this point here is also a low price. So if the market came down a little bit before it closed here, that will also be a low price. And this is called high price. This level here would be high price. I don't know if this explanation makes sense. So where we start from, if we are going at where we start from, is called an open price. Where we end is called a close price. But before if we open here and we happen to come down a little bit, the body of the candle is only representing the distance between the open and the close. But if we went to anywhere else aside the open and the close, we need to also record that. And that is why we call it a wick. And the lowest point of the wick is called the low price. And here to the same thing. And the highest point of the wick will be called what? High price. So this will be high price. And that is called wick. Like the wick of the candle. If you light a candle, that rope inside it, call it a wick. Because the bar that is measuring the movement or the candles, we also call it candle. So that's why we have wick. Some people also call it the shadow of the body, shadow or wick. It's the same thing. So there are some candles that does not have wicks, because we can just start from here and go straight up, or we can have a wick at the top and no wick at the bottom, right? So this is how a candle looks like, and this is representing the bull team, and this is representing the bear team. So I think this will be the first time we are looking at the chart. So let's come here and look at the charts here. So we are going to look at a few things here. So what is this chart? This is representing the movement between two currencies in terms of time. So there is a time period, and then we are measuring how much up or down one team has moved against another team. So this is the platform that we use to check the candles. We call it trading view. It is one of the things that we will look at. So we'll look at trading view and how to use trading view. Yeah. So this currency that we have here at the moment is euro and the pound. Euro and the Japanese yen, as we have at this corner here. Euro, Japanese yen. So let me change the color here to suit. So this platform, you can change the color of the candles to anything you want. But for the purpose of this class, let me change it to what we are already looking at. So each individual candle here is representing a price change in a specific time period. So I'm going to change this to 4 hour. So when we have 4 hour, what it means is this is the change in price over a period of 4 hours. Let's take this one here. So let's focus on this one here. So this means that this is red. So the market went down. So we started from here and then we went here down. And this is representing our wick, our high price and our low price. Let's look at this one. It means when the market started from here, it ended here in the period of 4 hours. And this is our low price, our wick, and our high price and our wick. Does this make sense? So where one candle ends, that's where another one will start from. So if this one came from here and ended here, another one started from that same level and pushed up, pushed up, pushed up. So when you look at the graph, right? I call it graph. You should be able to, depending on the direction of the market, you should be able to tell which of the teams are winning, not just one candle, the general view of the market. So I'm going to highlight some regions. So from the region that I've highlighted, which team do you think won or was in control of the market? The market was here, sorry. The market was here and it came down here. So what did it do? It came down. So it means the red team or the bear teams. The bear team was in control. The bear team was in control, right? Here, from here to here, the same thing. We were here, and now we are here. It means the bear team was in control. But if you look at here, so if the bear team is in control, it means which of the two currencies is in control, the euro or the Japanese yen? It is the Japanese yen, because the Japanese yen is representing the bear team because it's on the right hand side, or it's the second currency. So this is EUR-JPY, euro Japanese yen. So we have from here to here. This push here started from here. And now we are here. So this is representing what? This is representing the bull team, because we pushed to the upside. The green team was in control. So it means the bulls are in control here. So it's very simple. When you look at the market, you'll be able to see which of the teams are in control. So from here to here, the bears were what? In control. But going from here to here, the bulls were the ones in control, right? And they were in control for a very long time. And this is a collection of candles that come together to give us the long-term direction. So the bulls will take control, the bears will take control, but in the long term, we look at who was in control for that period. It's not about just one or two candles, right? So I hope this makes sense. All right, so end this lesson here and then we'll continue.